Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. Live on Real Radio.
Good morning.
No, I was waiting for Ross since he's sitting in the big chair today. I said, "You're it, Ross." And then we have blank air, dead air.
No, if we were to discuss it, I may have.
We did. We did about 3 minutes ago.
Oh, man,
you're in the big chair.
Yeah.
You gotta play with the big boys.
You got to wait till I'm in the room.
There you go. Hey, happy South Florida, everybody. Johnny has a well-deserved day off. He's with his family on some kind of musical adventure. So I hope he enjoys, and I hope the weather holds up for him. Man, it's been cloudy all day yesterday, but it didn't rain anywhere I was. Did it rain anywhere where you guys were, or was it just overcast all day long?
Just overcast. And I kept on looking at my phone to say, like, is it going to rain today? And it was no chance of rain the whole entire day where I was. Anyway.
Yeah, it was crazy, and it was really dark all day long. I did not like waking up this morning. We're getting close to that daylight savings time change, isn't it?
It's a little darker.
Yeah,
3rd?
it was so much darker
November
today.
3rd? Is it?
Oh, I don't know.
When is it?
Is it November 3rd, I think, is when it changes?
Oh, my God. I don't want to fall back. I don't like falling back.
I mean, I'll take the extra hour of, sleep, technically. But
Yep.
For one day?
I don't.
When I started my own company after working for a corporation for so long, when I started my own company, I promised myself that I would never fall back, and I would just adjust the times to fit the old schedule. So if something was at 8 o'clock, in my mind, it would be 9 o'clock, right? And I would just adjust, except for government meetings, right? If there was a government meeting, you can't miss it, right? Because it's at the time. But every time I've tried it, I failed miserably. I'd last like a month, and then I would give up, and I would slide into the regular time.
It's like going, trying to use meters.
Yeah. Well, what does that mean? What do you mean?
Feet?
Meters.
Or the
metric system versus.
Yeah, it's like trying to stick to the metric system.
Yeah.
Or the
Good
stupid
for about a month.
Fahrenheit Celsius.
Yeah.
That drives me crazy when they talk about Celsius degrees. I don't get it. So I'm a Fahrenheit guy.
I heard a stupid metric unit joke the other day. Or I saw it. It was if U.S. Americans smile, then do Europeans scalometer. Anyway, if Johnny were here, he would have laughed, but he also would have introduced everybody, said what the show was. Let him know we go live.
I think
some of that stuff.
I think Mike is jealous. He wasn't asked to be in the big chair. Sorry, Mike. I screwed it up.
No, I'm just a gentle reminder that you're not Johnny.
Well, the gentle reminder the person gentle reminding is Mike Rauch from the mortgage firm, otherwise known as the mortgage guy to us, to everybody here. Mike, welcome to the show.
Thank
Michael.
you. Good morning.
And the person sitting in the big chair today is Ross Komarinetz from Brightway Insurance, Juno Beach office, the only office when you're thinking of insurance in Florida, and now Georgia.
Yeah,
right.
Georgia.
He's in Georgia now, and Mike is Florida, Georgia.
Mm-hmm.
I always get this wrong. South Carolina.
That's right.
Tennessee, Colorado,
boom,
Virginia,
and Virginia.
Yeah, wow. Yeah, you're growing. It's he's turning to own conglomerate.
I just talked to someone this week who is considering Virginia or Colorado. So said, okay, I can help you.
Yeah, I can help you. Either go or buy one in each.
Is
right?
that super extensive to do, Mike? I mean, to just like, what, you got to take a test or something in each state?
You got to there's a course requirement, so something like per state, something like 8 hours of individual state regulation learning, and then you pay for the pay an annual fee, right? So you take the course, you pass some level of test,
right,
and then you pay their registration requirements.
Okay. Big differences in from one state to another with the regulations that are required, or
I'm trying to think of any differences at all whatsoever, and none. So no,
none.
I learned the same thing over and over again.
Right. Oh,
yeah.
Right.
Yeah.
So
there's no really
state-based
requirements,
conforming, right? Because it's all about conforming federally.
Yeah, I mean, yes, all of the regulations for residential lending come nationally, right? They come from the federal government.
Right.
There's some state stuff that I guess individual fines, may vary by state if you're like breaking the rules, if you're doing maybe it's like advertising discrepancies, or you're doing things like targeting certain groups in certain neighborhoods, things like that. Those would be local and state kind of regulation, or things that you could break those rules.
That totally.
Yeah, maybe I should pay more attention in the class. note the differences.
Well, when you don't break the rules, you don't have to worry about it.
Yeah, really. I'm not a rule breaker.
Yeah, so you don't have to worry about it at all.
At least not in my professional life.
You're a rebel.
So,
personally,
I wanted just to do a little thing about Hurricane Milton from was it last week or the week before last? Was it 2 weeks ago?
If you're talking about this most recent week, no.
Yeah, it was the week before last. Yeah, the week before last week.
It was the 9th.
10th.
Oh, okay. So we're at the 19th. So 10 days ago, a week and a half ago.
Yeah, exactly.
So they have a little bit more information about the tornadoes, because I got to tell you, I've been a little very curious about this whole tornado thing, because I covered so many hurricanes and lived through so many. I've never seen tornadoes like this before in my life.
Weather modification.
Yeah. Oh, yeah. Somebody's control the whole thing.
Is.
Those stupid contrails from the planes.
Who's talking now? Oh, you did say exactly. Juno Beach, didn't you? Oh, yeah. So, did you watch The Wizard of Oz at some point in your youth?
Of course.
So that was probably
I've even
your closest.
Watched it with David Gilmour, not Pink Floyd. I've even done the Pink Floyd version.
Oh, you played the soundtrack, Dark Side of the Moon. Yeah. Was it Dark Side or was it the
Dark Side?
Okay,
it's Dark Side of the Moon, I think, right? Yeah, Dark Side of the Moon.
As a soundtrack, and it lines up or whatever?
I think after the third roar of the lion, you turn it on.
Okay.
I think that's what you do.
Nice.
I've never heard of that in my life.
Oh, yeah,
really?
So
I'm a Pink Floyd
I've
fan.
heard of it, but I've never done it.
If you turn on the movie and have it, the Pink Floyd whole thing set up.
Okay.
Then after the third roar of the lion, the MGM lion.
Oh, okay.
Okay.
Yep.
Then you hit that's exactly when you hit play on Pink Floyd.
No kidding.
And it matches pretty good.
No kidding.
Yeah, it does match pretty good. Yeah, have a little Woodford Reserve and enjoy it.
I have to try that.
Yeah, it's fun. So if anybody hasn't tried that, you haven't ever heard of that?
No, I've heard of it. I've just never done it.
Yeah, you were never stupid enough to sit down. I was like, let me try this.
I mean, I got to track down a Pink Floyd Dark Side of the Moon album.
That's true.
Yeah. And then I have to track down a copy of Wizard of Oz,
which has the three roars in it.
Right. And then magically put that together, and I just haven't.
That's too much.
I haven't had time.
It's not that hard.
6 years.
That's too technical.
You could get that album at like what's the bookstore? Is it Board? No.
Why are you guys talking about album? Why don't you just get it online?
So you can actually get the record. He wants to do the.
Yeah, he wants to do
the real. Oh, and you got to buy a record player.
Yeah,
record player.
Yeah.
Yep.
Okay.
That's pretty.
And those needles are very hard to find.
Yeah.
Remember that when that was a scare? Record needles were going to become scarce.
Yeah, I scratched up my records really, really bad all the time too.
Oh,
that was one thing I didn't like.
That was his
hip hop. No, I didn't do that. I wasn't one of those guys.
Come by your house with Jimmy D.
That's why they call
slamming rhymes.
Jim and Rob.
So I wanted to go a little bit over the tornado thing, because to me it was really, like I said, fascinating about how many there were. Apparently it isn't as unusual as I thought. That was surprising to me itself. But anyway, what they found out is now that the smoke cleared, there were a total of 15 tornadoes in South Florida. 2 of them got to EF3s, which is 130 miles an hour or more. So pretty strong. 2 of them pretty strong. One was in Palm Beach County. The other one was in Glades County. There were 4 total in Palm Beach County. And the other thing I thought that was interesting about this was some of the other hurricanes have had almost as many hurricanes as this. There were 13 from Ian, 13 confirmed tornadoes. I said hurricanes. I'm sorry. Tornadoes, 13 confirmed tornadoes from Hurricane Ian. But that was split over 2 days. So I thought that was interesting that there were tornadoes over 2 days instead of just the one. They also noticed that, where is it? I'm sorry, I'm looking here. Palm Beach County in the state has the highest tornado count on record, with 193 tornadoes from 1950 to 2023. So over 73 years, we've had 193 tornadoes in Palm Beach County. I thought that was kind of interesting too. So
we certainly don't talk about it much.
Yeah, you don't hear about it much, but apparently, and most of the tornadoes, I think, I'm thinking my theory is a lot of them are really weak, like they're just barely tornadoes,
or they're in uninhabited areas,
or they go into uninhabited, and that's why they were saying it was kind of hard to even know about the 4 that hit here, because some of them had no. Some of them they determined how strong they were by the track of damage, and a couple of these there wasn't any track of damage that they could do, so they had to estimate what it was. But I thought that was kind of interesting. So tornadoes isn't not necessarily as unusual as probably a lot of people think, but the power of these were definitely unusual. There are very few EF3s or more that have hit in the whole history of Florida.
And as we become more populated and build more houses and build more structures, we might start to notice them more.
Yes,
there's less.
Sure.
Yes,
less
absolutely.
uninhabited areas.
Just like hurricane damage.
Yeah.
Oh, and that reminds me, talking about hurricanes, there was a gentleman who sent me a very, very long email, which I really appreciated last week after the show, because we were talking about that 1920-something hurricane. And who wasn't here last week? I feel like somebody wasn't here last week. Mike, were you not here last week?
I was definitely here.
Oh, okay.
So was Ross, Johnny.
Oh, and
Johnny,
we had a full crew.
Jimmy, you
That's
were
right.
here.
Everybody
Maybe you
was
weren't
here.
here.
Maybe I wasn't
No,
here.
I remember seeing Jim.
You were out of it.
The reason why I'm bringing it up is we were talking about the unnamed storm hurricane in the 1920s that really it broke the dam and it created all this damage. I had a gentleman that is a history buff, you could tell, and he wrote me a very long email about this. I don't remember everything, and I couldn't find it today, but I'm going to talk about it next week because he said he was making some corrections. So some of the stuff I said last week might not have been as accurate. I was going off of memory from an article I wrote probably in 1990, 34 years ago. So I probably wasn't 100% accurate, but I do care about being accurate on the show. We actually care about that.
Who was the history buff? Is it a regular?
It was just a regular listener.
Guy?
Yeah, and he
Did
was.
You know him?
No, and he was very, very polite. He says, "I listen to you guys all the time," but I could see that he said I got it wrong, and I'm like, "Oh, I want to read this," but I was driving because it was right after the show, and then by the time I tried to get back to it last night, I couldn't find it. So I know I'm going to find it, and I'll make any corrections that I have to make at that point. But
okay, you're going to retract it, yeah.
Well, not retract. I just want to clarify. I want to clarify because I wasn't trying to skew the information one way or the other. It was just based off of memory.
Everywhere these days.
I know you have to fact check everything now, right? And a couple other things I wanted to talk about. We're going to get into some insurance things later on in the show, but I wanted to talk about something that I thought was kind of interesting. Florida. Here's an article from the Palm Beach Post. Florida property inspections paying off for citizens. So apparently, one of the things that citizens did was they made sure that they funded to have inspectors to go out to all the properties pre-hurricane, not just pre-hurricane, but as policies are written, to really make sure that there isn't any problems with the properties beforehand, so they can notify the homeowner, you need to correct this and this and this, so that if the house gets damaged in the future, citizens isn't on the hook for stuff that they shouldn't be on the hook for. And supposedly they're saying that those checks, if you will, or the checks on property inspection checks, are really saving a lot of money. They think that they did. Since 2022, they've done 400,000 of these. Well, I'm sorry, take that back. They've increased the policyholder inspections by 166% since June 22, but they're thinking that this year alone, they're going to have done 400,000 of these pre-inspections, if you will. And they think it's cost them about $45 million to do those inspections. But they're saying that they get the $45 million back, plus another 100 million in savings by
just having the status of the home documented at some point,
and telling the homeowners they have to correct before, or they're not going to be covered. And I'm assuming that the homeowners are correcting. I mean, that's what I'm expecting. So this is a positive thing.
By the way, you could substitute Citizens for ABC Insurance Company, CYZ Insurance Company, because they're all doing it.
Right.
So it's not, unique to Citizens.
Right. Right. But the thing I like about this is that Citizens is taking the responsibility to do it. And I think it's a good thing. Anything we could do in order to save costs for insurance, that's what we need to be doing right now, because this is really a crisis, in my opinion. The potential for crisis. It isn't a crisis now. A crisis would be bills aren't being paid, right? There isn't enough money to pay the bills, right? We don't see that on any of the companies yet. We haven't heard that. They're not even expecting that to happen. But anything we could do to reduce costs in Florida for insurance is a good thing. And you got to keep, if you own the house and you have insurance, you got to keep the house up to a certain standard of responsibility, not just for you, but for the community. So
do they do those inspections, Ross, at any other time in like the life? Let's say you have Citizens for 5 years. Are they going to inspect it once a year? Or is it just after the initial policy, or is it kind of random?
So they kind of, like Jim said, they just started like the ramping up these inspections. Citizens is doing a lot of them at renewal, or they're requiring an inspection in order to renew, and they're doing a new business inspection as well. So this is kind of that first year that they're doing it. I don't think that if you needed to have your home inspected this year in order to renew, I don't think they're going to do it again.
Okay. And this is different than like your WinMit and your 4-point. This is actually Citizens sending out their own inspector or contracting an inspector.
Correct. All the insurance, whenever a new policy is written, the insurance companies do some sort of inspection. You may not notice it as a homeowner because it may just be an exterior where they come out and just do a quick look around. Okay, roof looks good. Everything looks good. If it's an older home, they may want to come inside and schedule a time to do that. And that's going to be the same thing as a 4-point inspection, but they're putting their eyes on it. Us as agents are considered kind of upfront underwriters.
Right.
We get a 4-point. Hey, according to this document, does it meet the requirements in order to go with this insurance company? It looks good to us. We give it to them, but they're still going to want to put their eyes on it to make sure.
And it's interesting. One of the things they used as an example of a person that was threatened to have their policy canceled if they didn't make a correction was having a trampoline in the backyard. And apparently that's a violation of some homeowners policies. Yeah, I'm guessing.
Trampolines, pool slides, diving boards, anything where that can lead to kind of an injury and lawsuit.
Yeah. So it isn't just about is the roof leaking or whatever. It's like anything related to the policy. So anyway, I thought that was interesting. They're saying it saved them over $100 million from these inspections. So that's a good thing. Another good story, and I just wanted to wrap up this part, made me feel really good. There was an article in the New York Times about the student loan modification and public service employee relief for student loans. This program's been out since 2007. We've probably been talking about this program, which we've done through the law office of Paola Krasker since 2013, 2014. And they finally hit their 1 millionth public service employee that got the student loan, the student loan debt relief.
And that's a 10-year program. So that means potentially somebody you talk to or you put them onto it in 2023 or 24, they've completed their student loan repayment and forgiveness.
I'm actually getting a little tingle right now, and I'm not joking. I got a little tingle here because my skin, because we were very much a part. I can't say a huge chunk of it, but we contributed to that whole relief of debt to public and service employees. It was just an awesome program.
Awareness.
Yeah, and getting them through the program and having them watch to go through that. I remember the student loan debt relief program is based on your ability to afford your student loan monthly payment. It isn't related to how much you owe on the loan. It's how much you can afford to pay every month. And there's an actual, real mathematical formula the federal government does based on your income and your bills to say, this is how much we believe that you can pay for your student loan payment every month. Usually for most people, it was a tiny fraction of what they had to pay, right, Mike? You've seen people $500 a month go down to $25 or $50 a month, right?
Yep.
We've seen how many people get $0 a month, like just don't have to pay anything, and it counts as if they're making payments every month.
Yep.
This program for the public and service employees was really great because after 10 years, whatever you paid, if you were paying $0 a month, because that was your income-based formula, and you did that for 10 years and you paid $0 a month, but you kept in the program by applying every year, 10 years later, whatever you owed is just wiped away and forgiven. So that's what the beauty of this program is. You're not saddled with the debt forever. 10 years does sound like a long time, but for most people, you're paying just a fraction of what the monthly payment would be. Plus, you're with a federal government program where the interest doesn't accrue for not making payments. There's no accrual or penalty fees of that. It's just, hey, based on your income, you're only supposed to pay $25 a month. And as long as you do that, you're in compliance with the program. So really proud about that. Really happy to see that we've had 1 million people. Part of me is a little sad about it because it's only 1 million people since 2007. It should have been 5 million or something, probably, right? But still, 1 million people have gone through this program. I think it's awesome. They've saved about 175 billion in student loan debt through this program. 175 billion.
Are they basically forgiven that much?
Yes. So
I don't know if you call that savings.
Well,
somebody's
savings for the homeowner,
Yeah.
or not the loan. The
student.
Yeah, the student, right? Or the former student, or the parent of the student, because they have parent-student forgiveness loans too, where as a parent, they
had the parent plus loans. I didn't know those were eligible for
yes, they're
the
good
program.
for, yeah, for ability to pay thing. And it's really based on your ability to pay. So how that program works is, let's say that you're making, I'm making it up, you're making $50,000 a year and your student loan debt is $500 a month. Well, based on your mathematical formula that Paul Krasker will get you through the whole thing, right? It'll spit out a number. Hey, you're supposed to pay $112.57 a month, or you're supposed to pay nothing, based on your thing, whatever the number is. And then you're locked in for that number for the year. You make the payments for a year, then at the end of the year, you have to reapply again. Let's say, though, that now you're not making $50,000, you got this great job, and now you're making $150,000 a year. Well, that year they recalculate your formula. Now, maybe that year you pay the full $500 a month. I don't know. Okay. And then you get through that year. And on the third year, let's say you lose that fabulous job and now you're not working anywhere. Okay. Now you go through the mathematical formula and your result's going to be, and I've seen this happen with many people, zero. You're going to pay $0 this year. And then you go through the year and you just continue to do that for a public service employee for 10 years and then it's over.
Yeah, they essentially do like an annual debt to income calculation. And so they're adding up your income, and then they're adding up your other debt obligations, things like your housing or rent payments, car payments, and they figure out how much you have left over that's maybe discretionary, and some percentage like that is how they do it. So yeah.
And the other thing that's great about this is that we used it. The reason why we started talking about it on our real estate show, right? Why were we talking about student loans? Back in 2014, 2015, 2016, 2017, 2018, we were talking about how the number one drag on the economy at that point was student loan debt, right? That was the number one drag on the economy. And they were saying if the student loan debt was wiped out, it would supercharge the economy because there's so much money that's being used for that would be spilling into the regular economy if it wasn't there. Because we know most people don't save; they're going to spend it. So
and they're they started making changes in the lending, like how you had to treat the student loan balances, how if you had to calculate a payment, even if it was deferred for 12 months or 18 months, you had to calculate, and it was impacting people's ability to qualify for mortgages. So even if you didn't have to make a payment on your student loan, you were kind of kicking the can down. it could still impact your ability to qualify
They
for a
still
mortgage.
counted it as part of your debt.
Yeah.
And so
we still do.
Yep.
Yeah.
So what happens is when Mike goes through the review process for all customers, he always asks, do you have any student loan debt? And then a lot of times it's like, oh, we're really going to help you out. Let's get you over to law office of Paola Krasker.
Yep.
You can do that program for free, guys. There is really no charge for doing that public loan forgiveness program, but you have to be sharp enough to understand how to present the numbers correctly to the federal government. We've seen many customers. So what most people do is they go to Paul, the law office of Paola Krasker, which is one of the few private law firms that's allowed to do this. Mostly it's nonprofit groups. But with Paul, he charges you a nominal fee to get it going and then just a one-time fee every year to reapply. And he puts it in the system so you don't forget to reapply. Because if you don't reapply, you get kicked out of the program.
Yeah.
One of my customers was in the program, Daryl and Amy. They were in the program for like 8 years. And they kept paying Paul every year to reapply. Then one year they called me up and they said, hey, Jim, they were paying nothing. They were supposed to be paying about $500 a month and they were paying nothing for 7 years. And then he calls me up. He goes, hey, my student loan bill went up to $1,500 a month. And I'm like, what does Paul have to say about this? He goes, we didn't use Paul this year. So what happened was they kind of didn't turn in their numbers correctly. And basically, when you're owed debt, you don't have to use the joint income, even if you filed jointly. You can just use the person's, the one that owes the debt. You use their information to determine the ability to pay. And they didn't do it that way. And then Paul, I told them to go back to Paul, didn't know if they can get back in the program, and they did. They got back in the program.
They got lucky.
Yeah.
Yeah, I think there's different ways, like when you talk about debt to income, like how do they calculate your income? Are they using pay stubs? Are they using W-2s? Are they using tax returns? So I think there's a variety of ways, that kind of like options. And so if the idea is to, show the least amount of income, you want to choose the option that does that. I think that's the idea. So whether that's a individual tax return or my portion of the joint tax return, right? Somehow you have to show that, hey, wait a second, that's our household income. That's nothing to do with my personal income.
Right,
Yeah.
exactly.
Yeah.
So if you're saddled with student loan debt, or you know somebody that's saddled, or you're a parent that signed on for student loan debt for your kid, give us a call. We'll get you a free consultation. We're going to tell you exactly the paperwork you need to give. It's all over the phone. We used to say it's 10 questions, 10 minutes, and you get your answer. And they're going to give you, the law office of Paola Krasker, if you give them the correct information, they're going to give you to the penny what the federal government is going to ask you to pay every month. And then you could decide if you want to move forward or not after you find out the terms. And it's not just for public service employees. It's not just like government workers or anything. If you have student loan debt and it's government backed,
federally backed,
they're going to be able to help you with it. So give us a call. We'd love to talk to you about it. And congratulations on the 1 million public service employees that went through the program. Let's go ahead and take a break. And on the flip side, we're going to talk a little bit about citizens insurance, Ross. I get a lot of people that when they're getting a new home, they'll actually complain like it's a dirty word. It's like, oh man, I have to get citizens insurance. So we're going to talk about a little bit about the myths and the reality of having citizens insurance as your insurance policy holder. And we're going to do that on the flip side.
Sounds good.
Okay, cool.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter. Here's what's happening with the weather on Real Radio.
From the Gordon Partners Weather Center. Have you been injured in a motor vehicle accident? Call 561-333-3333 or go to fortheinjured.com.
This report is sponsored by AutoZone. Get in the zone. The free AutoZone Fix Finder service can help you troubleshoot the likely cause of your pesky check engine light for free and help you save time and money down the road. Restrictions apply. Get in the zone. AutoZone.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Hey everyone, it is Florida Talk Real Estate. Happy South Florida. I forgot that I was Jimmy D today, replacing Johnny C on a well-deserved musical adventure today with his family. I hope he's doing great. We got a lot of things to talk about. We're going to talk about a little bit about the reputation of Citizens Insurance. Later on, we're going to be talking about why are the mortgage rates going up? Because they are going up, and you can't believe how high they're going up, how fast, and what they expect to happen in the future. But before we get into some of this stuff, one of our people on Facebook who are watching live on Facebook, Magali, she had a question about Edison Insurance, Ross. She said that she heard on one of our recent shows that when you renew with the same company, sometimes you get a slight decrease in the prices. I don't remember us saying that, but I'm saying she's saying that.
I think recently I've said I've seen renewals come down with carriers.
Yes.
Where the renewal rate was actually a little bit less than the previous rate, but it's not a standard for sure.
Because she was wondering, she's been with the same company now for about 3 years, and she's wondering if she should get a second opinion. And
you
I
shop
think
it anytime you want. Why not?
Yep, I agree. So Magali, if what you can do is off air, you could either do, and this is for everybody, you can contact us on our 888 number, 888-973-7828. When you call that, it goes to a live answering service, and they'll actually take your real information, and then I get it right away and call you back. You can go to our website, floridatalkrealestate.com. Just click on the contact us button, and then it'll send us an email. And is there any other way? I really suck at being Johnny. Is there any other way to contact us? I feel like there's another way, and I'm not
to contact us. No,
Yeah.
that's all right. It's the 888 number.
Yeah, the 888, or just go to floridatalkrealestate.com.
You can always look up Hot Ross.
Contact. Yeah.
Hot Ross, Brightway, Juno.
There's no list.
Yeah.
Right.
Hot Ross.
You can look up Mike Rauch with the mortgage firm.
Yep, Mike Rauch from the
But
mortgage
the
firm.
easiest way is that 888 number. You call in, and then you get, not only do you get to talk to the professional you want, you also can build a relationship with Jim.
Yeah,
right?
that gets you into the database. And when you're in our database, you get a weekly email from us telling you kind of what's going on in the market. Soon we're going to have like little YouTube videos connected to those emails, which are going to be very newsy, fact-based things that are happening in the market right now. Very short, 1 minute long videos just to kind of keep apprised of what's going on in the market. Magali, so all you have to do is reach out to us. She's saying, I'm sorry, I've misunderstood. Don't worry about misunderstanding. We don't know half the stuff we're talking about anyway. I'm joking. So we'd love to get a second quote just to see what would happen. And no promises either way. Ross isn't going to high pressure you.
Yeah, Ross has just mentioned a couple times over the past month and a half that prices have come down slightly. Just a little bit. Some of that reversing, the laws that they kind of adjusted for fraud that was going on in Florida is starting to work its way into the system, and prices are not only not going up, but maybe slightly coming down.
Yeah, a little bit. I've seen a few come down. I would say holding steady and not experiencing the same increases that we had been. So.
Yep. I was at a business networking group, and the insurance person there mentioned that they're starting to see some people getting slight decreases or just holding tight, which is much better than getting those 16%, 20%.
Yeah, like one of my clients, his renewal went down $7.
Mm-hmm.
Right? Okay. Yeah, it went down, but
for the year?
Yeah.
Okay.
Right.
Take it.
Yeah.
Hey, yeah, you got to take it. It's better than seeing a 16% jump every year.
Yes, I will call that a rate decrease.
Yes, absolutely. Anything, it's almost like when you're playing blackjack at the casino. If it's a push,
push is a win.
It's a win. Push is a win, right? It's better than you getting the money than they getting the money. That's the way it is. Hey, speaking of insurance, Ross, I wanted to talk to you a little bit about Citizens Insurance, because a lot of times when I'm talking to people and they end up getting Citizens Insurance or they already have it, they say it like this. Yeah, I got Citizens Insurance. I don't know what's going to happen if I need to file a claim or something. And they talk very down about it. And, Citizens Insurance has been described in the newspapers and the media as the insurance company of last resort in Florida, right? So that doesn't sound very good, insurance of last resort, right? But is that realistic? Is that a realistic attitude to have about Citizens Insurance?
Not at all. I mean, it does get painted as an inferior insurance company, insurer of last resort. But it was originally designed to be the insurer of last resort, meaning if you couldn't get coverage elsewhere, this is, here's a backstop for you to be able to get coverage. But Citizens is a regular insurance company. They're almost the most pure insurance company because they're a not-for-profit. So that's as pure as you can get. They buy reinsurance just like every other insurance company. So they have all the funds for it. People say they don't pay claims. That's not the case in my experience. I had one of my clients who he was away on vacation, came home, and he had water in his garage and all through his house. And he called me, and I explained to him how to go through the process. In order to get to it, they had to get to the leak. They had to remove like big granite countertops. And I think at the end of the day, his claim was paid $80,000, check by check, completely fine. He thought it was great. So that's a good positive experience. I had another lady who I was working with her yesterday to, finalize one of her policies. Turns out she had a claim on another house, and that was through Citizens, and she just voluntarily, I said, hey, it looks like you had a claim back in 2022, and she just volunteered, yeah, I had that, and it was with Citizens, and they came out and they paid me right away and gave me all the money I needed, and I was like, oh, you know what, that's refreshing to hear a positive review, because so many times I talk to people and I say, well, I send them a quote and it's Citizens, and they're upset, and at the end of the day, they're just the same insurance company. And really the only thing that you can't do with Citizens is really customize the policy and add kind of these extra endorsements that a lot of people don't know about and don't really care about to begin with. But that's really the only downfall that I really see with Citizens.
So, that's what I've seen with customers when they've had a file claim through Citizens, that it's just like every other insurance company. I didn't really think about the pureness before, the fact that it's not for profit. So, you can't say that about the other companies.
Right.
So that's really good. So the bottom line is with this, don't listen to the gossip of what your neighbors are saying about Citizens or what they think about. You need to talk to a pro like Ross to find out what your best options are. And Citizens sometimes is your best option, and sometimes you have other options. But don't get prejudiced by gossip and then make a poor decision for yourself.
Yeah, I'm not trying to sell Citizens, and hey, everybody should have Citizens. If there's another option, or a couple dollars more, and you want to go that route, go that route. But I wouldn't be apprehensive about being with Citizens.
So let's talk about this for a second, because we had a good conversation last night, I thought, because we kind of have a differing view on this. But you're the professional in the industry that's been doing it a long time, and I'm just an outsider looking from the outside in. But I'm very concerned about the fact that we had Helene and Milton this year, which were very, very strong hurricanes, which had relatively strong damage. I know Helene in Florida, it could have been much worse, because where it went, it was a lot of not very well developed area. And if it was a little farther south or a little farther north, it could have been much worse, but it was still a bad storm. And then we had, did I say Milton? I meant Helene. And then
you said Helene.
Oh, I did say Helene. Yep. Okay. And then Milton, just 2 weeks later, came back, generally the same area in a way, where it started, and then created more damage. And thank God that hurricane wasn't as bad as they thought it was going to be 12 hours before it landed, because they thought it could be a 4 or 5, 4 actually hitting the land as a 4 at one point. And then it was barely a 3, I think, when it hit.
Yeah, and then the storm surge kind of didn't do what it could have done.
Yes, it could have,
because it was sucking water out instead of pushing it in.
Yeah, I forget.
Depending on where it was.
Yeah, I forget what that terminology was about the water going out, and I forget what that terminology is. But
I guess it just depends on when it hits and which part of the storm are you at, right? If you're on the top edge, it's pushing. If you're on the bottom, it's pulling.
Yeah, and
something like that.
But I felt like if we got through this year unscathed, that it was really going to help ease the insurance problems we had, because it was going to give them all a breather. But now that we had these 2 big storms, I feel like that there's no relief for the insurance companies, because they still got to pay for the stuff that's insured. And Ross, you had a different opinion on that, and I think it's a very valid opinion. So I wanted to get that out there. And your answer was, I wouldn't worry about it, because they've already funded for these kind of things. That's what their job is.
Yeah, I mean, I don't think you're going to see what we saw the last 4 years, right? Because that had nothing to do with hurricanes. For hurricanes and catastrophes, the insurance companies underwrite for that. They buy reinsurance for that. So every year they're planning on having a hurricane event. We're in Florida, right? And I think we just kind of got complacent. We've had a hurricane kind of every year, 1 or 2 every year, for the last 5-6 years, I think, right? We've had one maybe.
Mm-hmm.
Right.
I know last year the West Coast got hit. I'm thinking about us on the East Coast,
but just Florida in general.
Yeah, so certainly Florida in general. Yeah,
so 1 or 2.
Yeah, because 2017 was Irma. right? We had Irma in 2017. I don't know about 2018 and 2019.
And we have like a Michael kind of go up and hit the
Yeah.
panhandle.
Oh, yeah. There was a Michael.
But, what if they're underwriting for this? They're underwriting for storms. They're buying
That's
reinsurance.
what they do for a living.
Exactly. So I think we kind of all got complacent, or at least we only remember between 2006 and 2017 or 2007 through 2017 where we had no storms.
Right.
We got very lucky where there were no hurricanes.
Mm-hmm.
And so everybody kind of just remembers that. And now when we get one, it's, oh my gosh, hurricane's coming. But prior to 2007, we've, in my recollection, we've always kind of had one or two that has come and hit Florida. Even growing up, and you go 04, 05, all those.
Now that I'm really like listening to what you're saying right now, I had like a little epiphany here. And what's interesting to me is if it comes out the way that you're saying, which kind of makes sense. I mean, this is what they do for a living. They're prepared for storms. They crunch the actuarial figures to figure out what they need for that. They have reinsurance backing them up, overseeing them to make sure that their numbers are in line with the reinsurance, which tells us that, what dawned on me is that if we really don't see any kind of dramatic spike hikes because of these hurricanes, it just shows you how much fraud we had, because we're 2.5 times the national average for insurance. And so if it's not related to the amount of damage of the storms we're getting, and it's just the fraud, that means our fraud is like raising our rates by 2.5 times compared to the national average, regardless of the storms we have. To me, I know we've talked about it a lot, about the fraud, but that's just another way to look at it.
Yeah. I mean, so if the insurance companies, they can underwrite and plan and actuarially, what is the chance of a hurricane hitting? What is the chance of the damage it's going to cause? They can underwrite that risk. What they can't underwrite for is how much attorney's fees are we going to have to pay out this year? So they can't, there's no way to predict that. So that's why we saw those rate increases. That's why we saw those insurance companies go out of business. It wasn't because of storm damage. It was because of not being able to underwrite for litigation costs.
One thing I want to tell people listening to this part of the show for insurance purposes, every year you should double check your insurance policy. Just don't let it renew with the carrier they have. Get a second quote at least, just to find out where you stand. You might get some pleasant surprises. You might be very satisfied with what you got, right? And just say, great, I'm going to stay where I'm at. But you should check, because there are people out there that can get savings if they're looking for it. Not everybody, but it doesn't take anything to check. All you got to do is reach out to us, basically give us your address. We send it to Ross. Ross doesn't even really, you normally have to even call you. He will if he has questions, but he'll give you a quote as to what he thinks that he can get.
Yeah, and Ross also might say he could do like apples to apples cover and say, hey, listen, you're good with what you got. You're not going to get a better rate. But you could also say, Ross, but I got to get a better rate. Like I just can't afford my mortgage payment, whatever, it's gone up because of this. So can we do anything? And Ross, of course, will be able to at least see if there is something you can do, even if you're adjusting your coverages.
Yeah. And if apples to apples, my quote is higher, I will tell you to do the things that I would do to reduce the premium on my quote, to do it on yours, because it'll be cheaper.
It'll be cheaper.
Mm-hmm. Yep. That's what we're all about, is just trying to get you the right answers to get you through the day. And if we can help you, great. And if there's another way you can get help that's better, we're going to tell you that too, because that's the way we're built here. We're Florida Talk Real Estate. We're here to help you with all your needs. The other thing I wanted to bring out about was, I'm sorry, hold on here. I wanted to talk just really quickly about, we're going to get into a little bit later about the mortgage interest rates and how we didn't really get that big expected decrease right after the Fed rate cut. And we're going to talk to Mike about why that necessarily didn't happen. But, one of the things I want to impress upon people, though, right now, it's still a really great time to be a buyer. Yeah, you didn't get that big drop in interest rates right after the Fed cut, but you've had a series of drops throughout early summer all the way till now. And we're still low compared to even November. We're way low. We're more than a point low, almost 1.35 below where we were in November as far as interest rates. So waiting for interest rates to go down is kind of an exercise in futility to kind of gauge what's happening in the market. And so there's many reasons why it's a great time to be a buyer, but I wanted to go over 3 reasons why it's a great time to be a buyer right now. And number one reason for it's a great time to be a buyer is there are plenty of houses to choose from. Inventory is up like crazy. There's tons of houses out there for the buyer that is choosy. They can pick fixer-uppers. They can pick ones that are kind of fixed up. They can pick what I call the Super Mac Daddy homes. They're all out there available for you. And the inventory's increased about 30% in South Florida since a year ago. So there's plenty of houses to choose from, not a lack of inventory. Number 2 reason why it's a great time to be a buyer, less competition. We did not get that buyer surge that everybody was expecting after the Fed rate cut because the rates didn't go down. The mortgage rates did not go down. So there's less competition out there. It's very rare for you to be in a multiple bid situation right now. It does happen, but it's very rare. So most of the time you're competing mano a mano with the seller and trying to decide what is the price that you'll accept and that they'll take to make the deal work. So less competition is always better for the buyer. Reason number 3, it's a great time to be a buyer right now. The sellers are way more reasonable in dealing with offers that at one point they would just push away and be insulted by. I just had a customer recently that got a 20% discount off the original list price to buy the unit. Another one of our guys, he got 8% off of the list price when buying the property. A lot of these sellers, I have sellers right now that would offer 2% of the total loan value to give back to the buyer at closing so that they could help pay down the mortgage rate, the permanent mortgage rate for their 30-year loan. And I have sellers right now that are offering that to qualified buyers. So these are 3 great reasons why being a buyer right now is much better than it's been in a very long time. So don't sit around and cry in your beer because the interest rates didn't go down as low as you think. That isn't the only thing to consider when you're going out home buying. Mike, do you have any other advice about this?
I mean, I like all of those points, Jim. I think it's easy to get caught up in it's not a great market, right? It's not a great market. And so pointing out to people why there are some reasons why it could be great for you is really important. So the fact that inventory is up is like, you get like a little bit of a waterfall for a buyer. So not only can you shop around and probably find, more variety of home that might suit your needs, but you can also negotiate a little bit harder, right? Because you might be that only offer, right? And that's all due to the fact that there's more inventory out there. Why is there more inventory? Who knows, right? Sentiment in the market, interest rates being high, insurance being high, but that's okay because you are targeting a number, right? You're targeting a home and you're targeting, location, all of that stuff, but you're also targeting a number. And so if you can find it and you can get the seller to give a little bit, like the ways that you're talking about, right? Maybe on the price, maybe it's a seller credit, right? You can use that to reduce your interest rate. You can use that to cover your closing costs. So you have more for fixing up things if it's a fixer upper, right? Moving expenses. So it just like, for me, it reinforces the fact that if you're a buyer for whatever reason, like this isn't a strategic move. It's not of course it's a long-term investment, but it's not like I'm buying now because I got to sell it in 6 months or I got to sell it in a year. It's I'm buying now because it's right for me and my family at this time. Can we do it? Right. So if that's you have to kind of get into the game. You got to get in there and you got to be able to go out and find those circumstances where it works. And I would say that there's more opportunity for that now than there has been in the past, year, 2 years, something
couple
like
of
that.
years,
couple years.
Inventory
right?
Inventory's been so low that the sellers had it over the buyers for so long.
Yeah.
So yes, you are going to pay a little higher interest rate, but historically, not really. But over the last couple of years, you're paying a higher interest rate. Over the last 15 years, you're paying about what the average interest rate was. We'll get into that later. But the other thing is that, yes, the other bad thing is insurance, right? The insurance is really a factor in affordability for mortgages right now. But because of the lack of demand out there, sellers are willing to give more incentives. The motivated sellers are willing to give incentives to the buyer in order to get the deal done. And you just have to have a sharp agent to help negotiate for you, but also have the attitude that you're open-minded enough to go out and look. Nobody's going to be twisting your arm, at least not us, to go out and be forced to buy a house. If you get lined up,
you have to write a contract on this house. No,
that's not going to happen. But the last two people I took out, both of them, I went out on a Saturday right after the show. Both people, it was 2 different Saturdays. I showed 7 properties both times. Both times they really liked one of the properties. They turned in an offer. We negotiated. They got way less than the list price because both houses were on the market more than 100 days.
Yep.
And we got good deals and they're both closing. So the thing is that the ability to do it is there. And you don't have to buy something. If they didn't like any of the 7 houses they saw that day, no big deal. We'll just find another 7 to go look at next time we go out.
And you can also, like, even before you get to the, hey, we're driving around looking at home stage, we have like window shopping on steroids type of thing. Like a lot of people are window shopping, which is very easy to do. You can get the apps on your phone. You can be online. You can look at what's out there. Like, you get all that. Window shopping on steroids is you've talked to Jim. You've set up criteria for what you're looking for. This could be, zip codes, price point, bedrooms, bathrooms, like all of the boxes you have to check. You also have been pre-approved for a mortgage, and you have my app, which allows you to crunch numbers on any home that you're looking at, right? You can plug in the price, plug in the taxes. Like, you're going to get a very accurate estimate, not only on what the payment's going to be, but what the cash requirements are going to be. And you can play around with it and say, okay, well, you know what? They want to sell it for $370. What if we come in at $350, right? How's that affecting things? And you can do this. And you can do that all from your office chair, from your couch, from your bedroom, like whatever it is. And so you put yourself in a position where you can take advantage of those tools. And then when you do make that call to Jim, say, hey, Jim, look, we've got 7 houses. All of these are potential. They could all work if we get the right configuration. Let's go look at them. Right.
And then
then it's like, and then if those 7 don't work, fine, reset, do it again, do it in another week down the line, whatever it is.
Until you find the one that you love.
Yes.
And then we find out if the seller's motivated enough to work with you. Sometimes the seller is not motivated. You'll turn in an offer that's reasonable.
Yes.
Compared to what everybody else in the neighborhood, but they still are thinking that it's still 2019. And they're or 2020, and they're going to get this crazy bidding war that isn't going to happen. And a lot of times I just follow those houses, and then every couple of weeks, hey, our offer still stands until it doesn't anymore. And then we start offering less.
To me, like, that type of strategy for saving money is much, much better than the, I'm going to wait for interest rates to drop. It's, hey, I found the house. You know what? They're asking a little too much. Why don't you call them up, Jim, see if they'll take a number that works for us. Or, hey, see if they'll give us a credit that we need. And they're like, no, it's too, we only been on the market 8 days, whatever. It's too new. We only been on the market 1 day, right? We're doing it open houses. Okay. So it's not going to work right now, but guess what? We can watch it and then wait for 2 weeks, 3 weeks, 4 weeks. In the meantime, you're looking at other stuff. But if that one stays on there, then that's where you can really save money. Yes. Right? Because then wait a second, this is what they wanted. They're coming down. Let's make this deal happen.
Absolutely.
So, yeah.
On the flip side, we're going to take a break right now. On the flip side, we're going to do a little educational bit on wind insurance or hurricane insurance versus flood insurance, and understanding the difference and everything through the eyes of a great insurance broker, Komarinetz from Brightway Insurance, Juno Beach. And we're also going to talk about this community out in that Fort Myers area, roughly. I don't know the exact city. I have to look it up, where they've been now through 3 pretty powerful hurricanes and nobody even moved from their house or lost electricity, and had no damage in the whole community because this developer swears that he built this community to withstand hurricane force winds up to 150 miles an hour, period. Just stay there. Don't worry about it. Just hang out. So we're going to take a look at that community. I thought that was kind of interesting about it. So on the flip side, we're going to talk about Babcock Ranches, I think it's called, and also wind insurance versus flood insurance, things you got to know.
Because you shouldn't have to get up off the couch. Tell your smart device to play Real Radio 92.1 on iHeartRadio. Here's what's happening with the weather on Real Radio.
From the Gordon & Partners Weather Center, have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm CBS 12 meteorologist Charlotte Carl. A windy day is ahead of us here in South Florida. The rest of the day expected to have wind speeds 20 to 25 miles an hour, gusting up to 35 miles an hour. We have a small craft advisory in effect, a high surf advisory, and a high rip current risk. So definitely not the greatest day to head out to the beach. High temperatures, though, comfortable in the low 80s.
This report is sponsored by AutoZone. Get in the zone. It's time to say goodnight to that check engine light with the free AutoZone Fix Finder service. It'll help troubleshoot the likely cause of your light for free, so you can drive with peace of mind. Restrictions apply. Get in the zone. AutoZone.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
from the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Listen on your free iHeartRadio app for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Hey, this is Jim DePola with the Florida Talk Real Estate Show, your number one information provider about all things real estate in South Florida. And we've been on now since 2012. So we've been on 12 years, going on 13 years now, giving you the most up-to-date information about what's going on in the real estate market from the perspective of regular people that are looking to buy or sell or maybe get a second home. We're not a podcast for realtors learning how to be a better realtor, although that some people do get tips. Listen to this. We know a lot of realtors listen to us. And we're not really here full-time to talk about full-time investing, although we do that off air with a lot of our customers. We're here just to give you an idea of what's going on in the real estate market. It is a buyer's market, seller's market, and how to navigate this tricky South Florida market as we've been doing for 12 years. And to help me with all that, we've got Mike Rauch from the mortgage firm, a direct lender that covers multiple states.
That's right. Good morning.
Hey, Mike. And we got Ross Komarinetz from Brightway Insurance, Juno Beach office, the only office that we even talk about. I don't even think there are any other offices than the Juno Beach office, right, Ross?
Well, you can find them online, but
I think it's the international headquarters are in Juno Beach.
Yeah,
that's right. The international headquarters.
International headquarters.
International.
Yeah.
Yes. So if you have any questions off there, all you got to do is reach out to us on our Florida Talk Real Estate page, website, floridatalkrealestate.com. And I want to thank everybody watching the show live on Facebook and YouTube. I want to let you know that starting next week, as long as that this show is recorded fully this week, we are going to start putting out last week's podcast as a podcast on YouTube as a full show. And the reason why we're doing that, we know about the audio problems that we've been having where I call us the Godzilla Japanese TV movie or Japanese movies where the words don't match the people's lips, that it's not synced right. We know that happens and there's not really a way to fix it. So what I've decided to do is take the show and create it into a podcast. And we're going to run that starting at 11 o'clock next Saturday. So you're going to have this week's show as a full podcast starting at 11 o'clock when we go off air live on YouTube. And we're going to do that every week. So if you're tired of watching us with the Japanese syncing on our audio versus video, you could watch the full show done correctly the following Saturday at 11 o'clock. We're going to try that. That's really not for the big fans that are watching live all the time. We really appreciate you watching live. We love you asking questions and reaching out to us, and we love those fans. But we're trying to build a podcast audience for the show that's basically based on YouTube, and that's what that's for. But it's going to start next Saturday. So if you subscribe to our YouTube channel, you're going to see a little premiere announcement that every Saturday at 11 o'clock, we have a new show so that you understand what's going on. Okay. One of the things I wanted to talk about, and of course, we got Jimothy, the producer. I'm sorry, Jimothy. I'm so sorry about that.
Don't worry about it.
If he doesn't like us, all he has to do is hit a button and we're gone, right? We're nukes. So you got to be nice to Jimothy, whether you like it or not. And I always like it, though. It's awesome.
That's all right, buddy.
Yeah, he's
always a pleasure to be here.
He's holding the button over there. He's holding the button at the same time as he's saying it.
Always a pleasure.
I wanted to talk about this community. This community in on the west coast of Florida, where this developer built a very small community, but he says that he built it to make it hurricane proof as best he could, where the houses are held to a standard of 150 mile an hour winds, and it can even handle storm surge the way they built these properties because they're lifted up in the air. And now they've gone through 3 major hurricanes. They've been through Ian in 2022. They've been through Helene this year, and then 2 weeks later, Milton. And I know that for Milton and Helene, apparently nobody in the community left, even though everybody else was being evacuated from that area. Nobody left their homes, never lost electricity, didn't even lose a tile on any of the roofs. They had basically no damage in this community. Pretty amazing. And Ross and I were talking about this off air. We were like, why don't they just make that the standard to build everything down here, you know? And it's really interesting how they build these. So they're doing cinder block for the first floor, and they're still doing wood on the second floor, which I thought was kind of unusual that they would choose that material. But it's the way that they're strapping the timbers on the second floor, and they're actually using steel trusses on top of it. And that's one of the reasons why these things are holding up so well. And the other thing is the garage is really the first story of the home, and the home is really on the second story, the living space. So that garage also helps with storm surge. I just think that's really, really interesting out there. I'm trying to look at the name of the community.
Babcock Ranches.
Is it called Babcock Ranches?
Mm-hmm.
Okay. So, and they also set up their houses with solar panels too, so that even if they did lose, quote, electricity, they're really not going to lose electricity as long as the solar panels hold. So I just think that's pretty interesting. I'd like to see new construction in Florida. Maybe it's happening, I'm not aware of it, where we can take the highest standards for this stuff and just start incorporating in the homes so that as these storms continue to occur, we have less and less damage from them. I think it would be a really good thing.
I'm sure there's a cost, perspective on that.
Yeah, I think these homes start at like 1.2 million, if I'm not mistaken. So you have to, these are $1 million. Yeah, 1.2 million. Yeah. No.
Lira.
I was going to say whatever. I don't know why it popped in. I was going to say whatever Laka would say from Taxi. I don't know why that popped in my head. The name from, he had some kind of name for his money over there. But yeah, so there are $1 million or more for these. Oh no, I'm sorry. Yeah, 1.4 to 1.9 million is what these homes are selling for. The other homes in the area, Mike, they're only selling for about 600,000. So you're paying for this protection.
Yeah, and also, I mean, that's brand new construction.
Mm-hmm.
Those homes are big. They're not, economy homes.
That's true. That's exactly.
I'm sure that house here would probably be 2.5, 3.
Yeah,
if it was down here in this area.
Yeah.
But you're paying for, hey man, they got those solar farms that are there. You don't lose electricity. So that's, that's kind of included in that price,
Yeah.
The peace of mind of having all those amenities to make sure you get through the storms.
So it isn't all doom and gloom. And the other thing I thought was really interesting, I didn't really know where this community was based. And basically it's surrounded by water. It's they're on a little finger canal in the intercoastal. One side of it, but the other side is, I don't know, a football field away from another canal. But these units are right near the bay and a bridge, and it's amazing that they've held up so well compared to all the other houses in the area after all those storms. So maybe that'll be the future of building here. Now, Ross, I wanted to talk to you because with Helene. When Helene first happened, we came out and said on the show that there was only like $3 to $5 billion in damage for Florida estimated, but Ian was 21 billion. But then like a week later, they said there was $160 billion if you added the flooding, because the 3 to 5 billion was just hurricane damage, but 160 billion when you added flooding in, which tells you a lot of the damage was flooding from Helene. And a lot of people, I think, don't understand what the difference is between wind insurance. Do you call it hurricane insurance or wind insurance?
I just call it homeowners insurance.
Okay, so the difference between homeowners insurance and flood insurance. Could you kind of tell us the differences between those two insurance
Yeah. So the difference between whether the coverage will apply to your homeowner's insurance or flood insurance is how did that water enter the home?
Okay.
If during a hurricane,
Front
roof
door.
gets ripped off and it rains inside your house, and now your house is basically a pool with 3 feet of water inside of it, that's going to be your homeowner's insurance. Now, if the water enters your home at the ground level, meaning that it's raining real hard or a storm surge, and the water is pushed into your home at the ground level, that's going to be flood insurance. No matter what caused it, if the hurricane pushed the water from the bay into your house and the hurricane did that, that's going to be flood insurance. Now, again, if the hurricane ripped off your house and it rained inside your house, that's homeowner's insurance. That makes sense?
And that's, I think, is the it does make sense. Thank you about that. And could you tell me, you gave me a couple examples before of people that had flood insurance and didn't, and how it can affect their lives. Remember we were talking about that?
Yeah. So recently and it was not as a result of the hurricane, but I guess up in Jacksonville, they had a lot of rain, and I guess August and September, we all had a lot of rain here too. And I got an email saying, hey, we had some water intrusion, and the water, the damage it caused. And I kind of responded, got back and said, well, hey, what do you mean by water intrusion? And they told me that the way that the backyard is angled, when it was raining, there was a root that diverted the water, and it diverted the water inside the house. And, unfortunately, that is flood insurance, because that water entered the house at the ground level. So there would be no coverage that applied, unfortunately. However, that happened to one of my clients probably 8 years ago. He called me and said, hey, my neighbor did something to his fence, and the way that he did it, the next time we had this big rain, it diverted the water into my house. And I remember when he was telling me that, as I'm pulling up his policy information in our client management system, and we had a flood insurance policy for him, and that's the policy that responded and paid all the damages. It would not have been covered under his homeowner's insurance. So it's important to understand that where that water originates from is what is covered. Also, when you get a new policy, you get a declarations page that shows all your coverages, and typically on one of the last pages in big letters, it says this does not include flood insurance, or this does not cover floods. And I get a lot of people that call me and say, hey, so if my hot water heater explodes, I don't have any coverage. And I kind of go through that same explanation. Okay, hey, where does the water come from? If the water originates from above or inside your home, at like a pipe or hot water heater exploding, toilet overflow, that's going to be covered under your homeowner's insurance. But if the water enters your home from the outside at the ground level, that's going to be flood.
That's where I think people get very confused, is the point that you made a little bit ago where you said, even though the hurricane might have created the storm surge and that water was pushed in because of the hurricane, if there wasn't a hurricane, we wouldn't have the storm surge. It's still considered flood damage.
Yes.
Even though the hurricane is the one that pushed the water there.
Yes.
So if you don't have flood insurance, your hurricane policy is not going to cover that. That's where I think people get really confused.
Correct.
It's like, well, it's part of the hurricane, right? And it's like, yeah, the hurricane, but it's water that came in from the ground up. So that's considered flood anyway. And that's the way it works. So it's really important that people understand that, because there's a lot of people that are going to be really learning that hard lesson now, or learning that lesson now, where they're going to be like the poor guy that you just mentioned that didn't have the flood coverage, and he had to pull the money out of his pocket for that. The one thing I wanted to ask you also about this is, if you're not required to get flood insurance, if you're not required to get it, like mandatory, is it still pretty inexpensive to get a flood policy?
Yeah. Probably like 5 years ago, it used to be standard rates. If you wanted this amount of coverage, this is how much it cost. And there was about 5 or 6 different options. Now they underwrite it more like a homeowner's insurance based on location and things like that. But I'm still seeing anywhere, on average, probably $500 to $700 per year for flood insurance if you're not in a high risk zone.
So like $2 a day, basically.
Yeah.
Yep.
Yeah.
And Yeah, so that's not a bad thing. I remember when I lived over in Wellington, we had a canal in our backyard. I didn't really think it would ever overflow or anything, but I just went ahead and paid for the flood insurance anyway, just in case, because if it happens and you don't have it, you wish you did. And back then it was even less expensive than it is now, because that was 5 or 6 years ago.
Yeah, I think those preferred rates were like $400.
Yeah, it was like, that's what I remember, almost like $1 a day, roughly. And Mike, do you have flood insurance or anything on your house? Because you're out in the acreage area, so you're not worried about it.
Yeah, so I'm slightly worried about it, but our homes are out there. They're built elevated a little bit, so I'm at least I don't know 8 feet above like where my
actually thinking about it, when you come to your
thing.
house and it rains hard, your whole driveway is it's a puddle. It's a gigantic puddle.
Well, the driveway was the owner somebody before I owned it put that driveway in. It's more like a landing pad for the cars, and they put it in below everything else, like lower. Mm-hmm. So I don't know who poured that concrete or like who did that job, but it's like if you're making a concrete pad, you should elevate it, right? It should be above the rest of the yard, not below it, type of thing. So yeah, that does get flooded, and my yard gets puddles in it, especially during the summer when we have like heavy rains every day. But my house is up high from that, probably 6, 7, 8 feet above the yard in general. So,
hey, I want to backtrack for a second because I didn't see this until just a second ago. Jack, who's a fan watching on YouTube, and thank you so much. He said that we're not talking about Babcock Ranch, which is very far inland. It's funny. He just said that's like 50 miles inland, which is what I thought. It's actually Cortez is the name of the community, Cortez. So I apologize for that. The price ranges are, right where Jack was saying. He says $1.8 million for the home. I said 1.4 to 1.9, but I had the wrong community. It's Cortez. So I apologize.
Which one's
for that.
Cortez? The hurricane-proof one?
The hurricane-proof community.
No, Babcock Ranch is that hurricane-proof community.
Yeah, but the one, he's right. The one I read about CNN, it's Hunters Point Homes in Cortez, Florida.
Those ones are all built up, or the garages?
Yeah, with the garage and the solar panels and everything. Now, I think Babcock Ranches also has hurricane-proof homes out there.
That's the one that got like the big attention.
At one point, yeah, but Cortez is much closer to the water, and it's kind of been through these hurricanes, and that's why everybody was talking about it. And Jack said, last thing Jack said, and Nick is saying the same thing. Nick also was saying, hey, you got, he's on Facebook, and he's saying, hey, you got the communities wrong. So sorry about that, guys. You're right. It's Cortez. But Jack also left off saying, I'm not getting flood insurance. I made sure I'm nowhere near the possibility of getting flood water. But just so you know, Jack, listen to the story that Ross just said. You could be in the middle of nowhere, and if your neighbor diverts the water from the property and it rains really hard, and that water ends up coming into your house, that's flood insurance, right, Ross? It doesn't matter.
Yeah, and I think I read somewhere where like 40% of the flood, the areas or the people that had flood damage weren't required to have it.
Right, exactly.
And they're not in a high risk flood zone,
but they got damage from it. Right. So that's why it's important. I'm not telling everybody you get flood insurance, but it's something that you really should consider, because if you're tight on money, $700 a year is definitely worth it if you do have a problem.
Yeah.
So anyway, I just thought that was really interesting. Because I don't own a house right this second, Mike, have you seen your insurance policies go up dramatically over the last couple of years, or no? You have?
I say the same thing everyone else has. And I kind of I basically just make the decision to lower my coverage as much as possible just to keep the premium in line. So I got high deductibles, but I'm also mentally prepared to do work. I could have damage and not even have an insurance claim type of thing.
I totally get it, because I used to have a wood frame home too. So if stuff happened, you could put on a belt and take care of it.
Even if probably if one of my big pine trees fell on my roof or something, I'd have a problem. But most of the stuff I'm comfortable. Whatever. Take risks. You weigh the pros and the cons.
Yeah, I guess
if I wanted really good insurance,
table, right? If you need to make up the money.
Yeah, if I wanted really good insurance, it would be way expensive. way too much.
Yeah. It would just
based on the age of my home, its frame, it's in the acreage.
Yeah.
I mean, when the homeowner's insurance was at about $3,500 4 years ago on my house. Now it's $8,000.
Right.
Yeah.
Yeah.
And you're the inside guy. Like you get the discounted rates.
You know what you're doing. You know what you're doing, right?
Yeah, wholesale.
That's really crazy.
Yeah, I wish that'd be nice.
Hey,
we're all getting those huge rate increases.
Let's take the last part of this segment of the show and let's talk about something that's near and dear to my heart. Is why are the interest rates going up? They haven't stopped. They just keep going up and up and up. And you know what? Some of the economists are saying that they're going to continue to go up through the end of the year. So just to set, and I'm going to ask Mike, why do you think the interest rates are going up? Because you're the mortgage guy, so you're responsible for all the interest rates.
It's all your fault, Mike.
It's all your fault, Mike.
It's my responsibility.
So let me just set the scene here about why are mortgage rates going up. Okay, so before the Fed cut the rate, we were at 6.09%. This is all Freddie Mac figures, right? And what everybody expected once the Fed cut the interest rate for the Fed reserve rate, and they cut it 0.5%, everybody was celebrating because they thought it was going to be a huge reduction in mortgage rates. But that isn't what happened. The week after the Fed cut the rate, we went from 6.09 to 6.08, which is basically flat. And then after that, we went up to 6.32. And then this Freddie Mac report that came out this Thursday, we're already up to 6.44. And Freddie Mac is predicting we're going to be hitting 6.5s before we start seeing any kind of a drop. So, Mike, I got to ask you, why do you think the mortgage rates are going up right now?
So I guess there's probably like three things, Jim, that I could think of. And it kind of goes back to, well, did they go down at all? And the answer to that is yes, they did go down leading up to the Fed decision. So mortgage rates were going, the 2 months leading up to that September, I forget what day it was, the September meeting.
I think 16th or 18th or something.
Rates had gone down about 0.5 point in that 2 month period, right?
Right.
About 0.5 point. So we went from like 6.5 down, or 6 something down to 6-ish, right? And that was because the mortgage industry or the investment world, the bond industry was predicting what the Fed was going to do. And so we did see rates drop. We did see the Fed rate drop. I mean, the mortgage rate drop, but it was leading up to the decision. And then once the decision was made, it was like, okay, we got it. So it was basically baked in to the thing. So that's the first thing. There was a drop leading up to the Fed decision. I think the second thing is, and when I say 0.5 point, well, the Fed dropped 0.5 point. That might have been a little bit of an overshoot by the Fed, right? So they came down. They're like, hey, we love where inflation's at right now. It's we're predicting inflation's doing what we want, but now we're getting some ripple, some what am I trying to say? Like
worries,
whisper, about the jobs market, right? So unemployment, like is job market weakening, and that's going to be a problem. So they did let's just take those two points. Inflation where we're at, but we're a little bit worried about jobs. We need to make a big splash here. So 0.5 point rate reduction, right? Which kind of lined up with what mortgage rates are doing. But then what happened? A jobs report came out, right? This is the third thing. So then the jobs report come out and was stronger than what the whispers were, what the rumors were, what the predictions were.
So, showed the job market wasn't getting, the job reports weren't getting weaker. They're actually getting stronger.
Yeah, economy's still cooking. Economy is cooking. What's going to happen? We just dropped interest rates. Okay, spending's going to go up. Like you're going to see inflation start to creep back up because of that, right? So now all of a sudden, what's the investment world doing? They're saying, well, wait a second. What's the Fed going to do now? Is the Fed going to bump it back up? Did they move it too much? So there's a little bit of this like what's going to happen type thing. I mean, if you're saying mortgage rates are predicting what the Fed's going to do, I don't think you can use that as a general, barometer for what you're going to do. But if anything, if you see mortgage rates going up, some people might say, well, the Fed's going to bump the rate back up a quarter. Now, I don't think anybody is seriously expecting that or predicting that. If anything, they're predicting still more cuts through the end of the year. But, so those are the reasons. And I think the overall thought process should be that mortgage rates are not tied to what the Fed is doing. right? We follow the trend, right? Over the long term, you stack like lifetime Fed chart over lifetime mortgage-backed securities chart, and you're going to see the movements the same. Not exactly, right? There's going to be variation, day to day, month to month. But mortgage rates will move based on the 10-year treasury. Like, watch that chart. That's the one you should be looking at. So what's happening today, what's happening tomorrow, or yesterday, what happened this week. And the treasury is, it's an investment thing.
And the reason why we talk about this stuff, some people might think this is kind of wonky stuff, but it has real effects in real life for people, because the interest rates did not drop the way that people expected to, which was we would get more interest rate drops for the mortgages after the Fed cut the rate. That's what people are expecting. So based on that, there were a lot of people expecting a surge of buyers to come into the market. That didn't happen. We didn't have the surge. In fact, we're down this week 17% year over year for applications for new purchases. So we're not seeing that buyer surge. Now that affects more than just the buyers. We have less chances for refis, because a lot of people were thinking that even though that we had that 0.5 point drop before the Fed rate cut in interest rates, people were expecting more after the Fed rate, and they thought that would turn them into potential refi candidates. But a lot of refi candidates that were hopeful they were going to get a refi, the numbers just don't work yet. There's still not enough of a drop in the interest rates. And then the third thing that it affects, so it affects people looking for a refi, affects the buyers not having the surge, but it also affects sellers, because now we have less people to buy the houses that are already on the market. And we're already seeing days on market increasing. We're starting to see real price depreciation, meaning significant price drops happening in communities. And until we get those deeper interest rates cuts, this is kind of where the market's going to be. We're going to have more of a buyer's market than a seller's market. It's not super strong either way, but it's definitely leaning in the direction of a buyer's market than a seller's market. And we're going to have sellers that are pickier, and we're going to have less of them coming in raising their hand and saying, it's time for me to buy a house. Even though I'm telling everybody, it's time for you to buy a house if you can afford one, because you're going to get a good deal, probably a better deal than waiting for the interest rates later. But this is really interesting stuff because of how much the media pushed that the Fed rate cut was definitely going to translate into immediate mortgage rate cuts. And that didn't happen, and everybody was surprised about it. But that isn't to say that we won't get rate cuts in the future, even if the Fed doesn't cut the rate, because that's the last thing I want to leave off on. We had from May, 7.22% was our Freddie Mac in May. And we went all the way down to 609 without any Fed rate cuts, right? Just organically, because the mortgage rates are tied to the 10-year bill, which is looking for long-term economic outlook. So
let me one last thing too, Jim, is if you're a buyer, and this kind of goes to what we talked about earlier, if you're a buyer waiting for interest rates to go down, guess who else is waiting for interest rates to go down? Sellers. Why? Because they know that buyers are going to be coming out. And when there's more buyers out, it's more competitive. They're going to have multiple offers on their home. So it's like, it just reinforces the fact that that's not the number one critical factor. Interest rate should not be the number one deciding factor for what you're doing. Absolutely.
We're going to go ahead and take a break. And on the flip side, I want to do something fun. There was a really good article where it talked to a bunch of different kind of industry leaders, the National Association of Realtors, economists, and other industry leaders to predict what's going to happen to interest rates in 2025. We're going to take a look at that on the flip side.
All right, here we go.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's what's happening with the weather on Real Radio.
From the Gordon and Partners Weather Center. Have you been injured in a motor vehicle accident? Call 561-333-3333 or go to fortheinjured.com.
This report is sponsored by AutoZone. Get in the zone. It's time to say goodnight to that check engine light with the free AutoZone Fix Finder service. It'll help troubleshoot the likely cause of your light for free, so you can drive with peace of mind. Restrictions apply. Get in the zone. AutoZone.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation, because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
That's right. This is Florida Talk Real Estate, your number one news provider of all things real estate in South Florida. And we're going to continue on with our show today. We're going to start talking about what's going to happen with mortgage rates once 2025 starts, because everybody was a little disappointed that we didn't get a dramatic rate cut for interest rates after the Fed cut. But Mike, in the last section, just explained to us why that happened. And if you want to check it out, you have to go back to our reruns and check it out later after the show.
Jim, can you fix your camera real quick?
Sorry? Who?
Pointing up at the sky.
Who, me?
Your camera, yeah.
Oh, I guess that would help. There you go. There you go. Thank you.
Is
Thank
that
you.
pretty mug?
Yeah, there you go.
There it is. Be careful,
Yeah.
ladies.
Face for radio. I got the face for radio, guys. I'm telling you. So I wanted to go over what I thought it was kind of interesting as to. Oh my gosh! You know what? Hey, why don't you guys chit chat for a second while I find something? I'm missing something here, which is really.
You got to get
bumming
the
out.
predictions.
Yeah, I
You
got
had
to
'em
get
up
the
there.
predictions because they were up here and now they're gone. So hold on here.
Who's going to do anything for Oktoberfest?
I usually
Kicking
don't
off
do anything.
this weekend, right?
What's happening? Where's the place to be?
The German and American Social Club.
Okay.
Right. Whereabouts is that?
I think
Palm
it's in
Beach
Lake
Gardens?
Worth.
Lake
No,
Worth?
I think it's in Lake Worth.
No,
yeah.
Lantana
Or
Road.
Lantana. Yeah, they do like a
Okay.
big Oktoberfest.
yes.
It's they
Go
they
get
got
some Wiener
carnivals, Wiener Schnitzel.
Mm.
You know what? I got a buddy I think who traditionally would go up there. I don't know if he's done it in a few years, but I'm going to ask him.
I have one of our volleyball players. He's actually German from the motherland.
The
And,
father.
Is the Vaterland?
Isn't it
Is it
the
Deutschland?
I don't know. I'm
Which
used
is
to
called
calling it
Deutschland.
the motherland when you refer to another country, but that way.
Yeah, I think it was
When
maybe.
you're a native,
You know what?
yeah.
I might be entering into territory I shouldn't be. Maybe the fatherland was during the 40s, 30s, and 40s thing.
Yeah, I don't know. But he goes and promotes it for us and tries to encourage everybody to go. It looks fun.
Cool.
I know they have. I know that some of my staff has gone in the past and participated in some of the games and things they do. And,
Okay.
What kind of games they got? Like, throwing logs?
I haven't been, but it I'm pretty sure it just revolves around drinking beer.
Drinking beer, yeah.
And how good you are at that.
How long can you hold up the beer mug?
Okay, all right. There's a
In
good
front
one.
of you,
Mhm.
right?
How many beer mugs can you carry at one time? Like some of
I've
those.
seen those beer
Maidens of some
yeah,
sort.
beer maidens. I've seen them carry a lot.
Yeah, like all
double-decker,
stacked on
like
top of each
double-decker,
other,
yeah.
like on
Yeah.
the thing. Yeah, it's crazy.
So, Mike, have you ever gone there? Have you ever gone to the Lantana American German
I feel like
Club?
I've been there, but not during Oktoberfest. I feel like I've been to a spot where I got some German fare, like your traditional German fare, but it wasn't during the actual event.
You should go and check it out. I think you and Tiffany have a really
All
good
right.
time out
I'm
there.
German too. Well, at least my name is German, right?
Yeah.
Rauch
Yeah.
is a German derivation from way back. Actually means to smoke, right? So like there's a beer called Rauch beer, which
Yeah.
is smoked beer. Yeah, you can
So
find
why
it.
do you say Rauch?
So I don't. I say Rauch.
Oh, yeah,
Rau.
that's Rau.
Yeah,
That,
12
I meant
years,
to say, why
Jim.
do you say Rau?
No. So that's one of my one of my
that's like my
forefathers
name.
decided to call it Rau instead of
Yeah, that's
Rauch
like
or Rauch or Rau.
Americanized.
I don't. Yeah,
Some
I
names.
don't have a good answer for that. I just know that was my last name. From my grandfather's grandfather. That's what I learned.
Yeah, I pronounce it Paola, but I guess the Italian real way is Paola. Paola is
Di Paola.
yeah, no, it's
Paola.
Paola. No, P-A-O is supposed to be Pow.
Paola.
Yeah, Pow.
Di Paola.
Yeah.
Jimmy.
When I was I got
Come have your
so
pasta.
I got so tired when I had my byline in the newspapers that everybody butchered my name so much. Then when I went to the Palm Beach Post, I took the first A out of my name, so it was D-I-P-O-L-A.
DiPolo.
DiPola.
Oh,
so
DiPola.
So people would pronounce my name right. So I had my name, my byline in there was DiPola. Then I moved over to the Sentinel, and the Sentinel would not let me use that name. They demanded I use my real name. And
Why is that?
I don't know.
You
the
can't use a
Sentinel.
pseudonym and
No, they
journalism?
weren't allowed, right? So I had to put my
Deep
real
Throat?
name in there. So I put
What?
my real name in, and I was there for a couple of months. And one of the editors for the Post called me up to say, "Hey, do you know that your name is being spelled in the paper wrong every day?" And I'm like, "Well, not really.
Technically.
Technically, you guys had to spell it correctly." That was kind of funny.
Listen, it could be
But-
worse.
Well,
Your
yeah.
last name could be
Komarinetz.
Komarinetz.
I don't know why I had such a hard when Ross came onto the show. I had such a hard time saying Komarinetz,
You're not the first one.
and I know. And he used to say it. I don't know why you think it's so difficult. You used to say it all the time.
The way I say it, how do you pronounce that? I go, I mean, it's phonetically correct.
Right.
It's just daunting to look at.
Yeah.
You see it, and you're like,
It really isn't that bad, though.
It's
after
the
a while.
A. It's the A that's problematic because it'd be Komarinetz or Komarinetz.
But see, people always say Komartinez.
Oh,
I get that a lot.
Komarinetz.
Yeah. Yeah.
Rossi
Let's
K.
sound it out.
It's one of those words, or in this particular case, it's a name where you're better off hearing it and then just going by that rather than trying to read it. And even though you're right, it is fairly phonetically spelled out.
Phonetically correct. There's no like silent.
It is
silent
okay, Timothy.
consonants.
If it's phonetically accurate, go ahead, spell it.
Komarinetz. Nope.
Wait a second.
K. That's why I always went by Ross K.
Yeah.
That was easy.
So we're gonna do
Nice one.
We're gonna do mortgage rate predictions for 2025. And the article I read, they interviewed people from the National Association of Realtors, economists, and bankers, people in the banking industry, as to what they think the interest rates will be by the end of this year, and then every quarter in 2025. And I found it to be very interesting, and buyers should be listening to this very carefully, and so should sellers. So right now we're at 6.44 Freddie Mac rate right now, 6.44% for a 30-year loan. So where do you think that the predictions are landing for the end of this quarter, the end of 2024? Where do you think they think interest rates will be by the time that by December 31st?
So we're predicting what they're predicting, or our own predictions?
No, you're predicting. Okay, so let me start this over. We're going to do mortgage rate predictions 2025. So the end of the 2024 quarter, the fourth quarter for 2024. What do you think the economists, the bankers, and the National Association of Realtors believe the interest rate will be by the end of this year?
6%.
What do you think?
I was going to say 6162.
Okay. And what do you think?
I'm right there, like 6.1.
6.1.
Yeah.
6.5%. They think it's going to be a little higher than where we are right now. They think it's going to stay pretty much where we are right now, creep up a little bit by the end of the year. Okay. So now, what do you think the mortgage rate prediction for quarter one in 2025 will be based on these? What do you think they're predicting for the first quarter of 2025? Mike?
6.25.
6.25.
I'm going to hold steady at my same.
6.162.
Yeah, I think that's going to be my answer the whole way through.
Okay.
Well, if they're predicting 6.5, then again, maybe 6.5, 6.6, maybe another slight increase.
Okay. So they're thinking that we might get to 6.25. Mike wins. Ding, ding, ding. They're
looking for
it to thinking it's going to go slightly down, a quarter point down roughly for the first quarter.
Okay.
Now, what do you think the mortgage rate predictions for quarter two in 2025 will be? Mike?
6.25.
6162.
Yeah, 6.1.
6.1. Okay, 6.5, 6.1, 6.1. They think that the rate will get down to just about 6% is where they think it's going to get. Okay. Mortgage rate prediction for quarter three, 2023. I'm going to start with Ross.
6.
6. Yeah.
6. What do you think?
I think 6.25.
6.25. 6 is ding, ding, ding. Okay. And then quarter four in 2025. Last quarter. Okay. This last quiz part.
3%.
5.75.
Okay.
5.8.
5.5 to 5.75.
Wow.
So
wow.
Listen
that
to this.
much.
Yes, that's what was
in
surprising to me. Last quarter. So they're thinking a year from now, we might be down 3/4 of a point. That's it. That's
no
it, guys.
Kidding.
So this is the thing. This is what I'm trying to tell sellers and buyers right now. The horizon for interest rates, there is nothing on the horizon that thinks you're going to get into even low 5s.
Well,
right?
I mean, I'm waiting for 3.
Yeah. And so how old are you? I'm joking, right? Because you're going to have to like double your age.
Can you repeat them again? What was cute?
Okay.
So at the end of the year, they said 6.5.
They think about 6.5
So
by
we're
the
flat
end of
for
this
the rest of the year.
Right? And then the first quarter, we might go down to 6.25.
Then to 6.
And then the next 2 quarters, we're going to be between 6 and 5.75, maybe. And then the last quarter, maybe 5.5, but 5.5 to 5.75. And here's the interesting thing. The economists, the bankers, and the National Association of Realtors, all three of their predictions for each quarter were very close to each other. There wasn't a wide divergence in what they thought. So that's even, to me, even more surprising that we didn't have any outliers where somebody thought, oh, we're going to get to 5, and another person thinks we got to 7.
Right.
Everybody was really tight. So they're thinking that this is the interest rate that we're going to be living with for quite some time. And so what does that mean? Historically, the interest rates we're having right now are pretty much average interest rates over the last 30 years. And anybody waiting for that 499 number, I'm not going to ever tell you it's not going to happen. But betting on that it's going to happen, hey, go to Vegas and bet it all on black, because you'll probably have a better chance picking that number, picking red or black versus 499.
Yeah, you could put your down payment on that, on black, and win, and then now you can buy double the house.
Yeah,
double the house.
That's one way of reducing your mortgage payment.
And then if you lose,
borrow less.
If you lose,
wasn't meant to be.
Yeah,
we'll rent for another year.
Karma
sometimes, right? Karma box.
You know what's funny, Jim, about that trend there?
Yeah,
it's all down. They didn't predict a single uptick throughout the year.
They didn't.
So what was the last year where we didn't have a single up? Well, they're also doing per quarter, so I'm not sure exactly what that means, like the average for the quarter or the end at the end of the quarter. So I don't really know what it means. But if they're saying that rates won't go at any point during the year, they're not going to be higher one month compared to the month behind it, I will say flat out they're going to be wrong about that, right? I mean, that's the way the mortgages move.
Because it goes up and down.
Yeah,
but there could be a trend of either continuing to go down.
True.
Or a trend to continue to go up.
If you're drawing a straight line on the chart, which ways it's going, they're saying it's going down. Not huge, right? Not big movement, but they're going from 6.5 down to
5.75, maybe
3/4 in a year.
5, right?
I mean, we've seen that this year. We've seen that.
Yes, we
because we had a crazy. That's what they have not called for a spike that allows for a point of downward movement. They're basically saying the spike is now the end of the year, 6.5. Right?
Yeah, they think that this is going to be the highest interest rates in the next year, but it's only going to go down maybe 3/4 of a point, roughly.
So based on your conversation, 2026, we should be seeing our 3s and 4s then.
Definitely. Wait for the 2.
Yes.
Does that tell you anything about what they're predicting for the election? Because I feel like is the results of the election important for what's going to happen with interest rates in the coming years?
The article didn't bring it up at all, so I can't tell you it was a factor or not. But they didn't bring up the election at all. What they did say is that they felt that inflation is going to continue to cool. And the job market is going to,
stay strong.
They definitely all are believing in the soft landing, that whole soft landing thing that we've heard over and over again. They all bought into the soft landing. They think we are not going into a recession. They don't think a recession is on the horizon for next year, right? They don't think that that's happening.
And they might be saying it doesn't matter who wins the presidency. The economy is mostly independent from that.
Historically from this show, because we started in 2012, right? So we had an election right before we started the show in 2012, right? And we've had 4 elections since we've been on the show. If I'm not mistaken, this is the 4th presidential election. I have never seen in any of these elections, and some of them were very controversial elections like this time, where people were very red or blue, and they were like, don't pry my color from, you can pry my color from my cold, dead fingers, right? Like, which side I'm going to be on.
Yeah.
So it's been very emotional several times in those elections. Everybody said the same thing. I want to wait to do something until after the election. Nothing happened after the election. It didn't matter who got elected. And we had some surprise elections in there where people thought one person was going to be elected and not. And it still didn't affect real estate market. You know what affected real estate market? COVID. You know what affected real estate market? Increasing insurance rates because of fraud, right? That affected real estate market, right? You know what else affected real estate market? Inventory. Inventory affects real estate market.
Lending practices.
Right. Well,
we go back to like 2008.
2008.
Yeah.
Big catastrophic events like that. And then, COVID being another big one.
Yeah.
Obviously
Deregulation.
Right.
Or regulation.
But those things are not really related specifically
to the president.
And especially right after the election.
Certainly.
There might be an effect from a presidential decision on something, but it usually has to percolate for a while, and you see the results later in that year. You're not going to have an election in November and January, something amazing is going to happen, good or bad, in the real estate market. It's just, that isn't the way that the real estate market's built.
If we say the big mover is the Fed, which it is, right? We've talked about how it's not tied directly, whatever, but it is a big mover, and you can watch that trend. And the Fed is supposed to be independent from the party in power.
Yeah, and
right?
One of the things
supposed to be.
I'm a big believer of checks and balances on everything related to government. You have to have checks and balances. No side can get stronger than the other side's, at
least for a long period of time.
Yeah. Yes, you have to have checks and balances, and having that Fed as an independent body, I think, is really, really important, because it's too easy on the political side to say, hey, I want lower interest rates so I can get elected, right? Or I want this, and I want to do that without worrying about the long-term effects of dropping the interest rates, heating up inflation, things like that. I mean, this half-point cut the Fed did.
Yeah.
People are really worrying that that it's going to cause what we were talking about a couple weeks ago on the show, reinflation. We've talked about inflation, deflation, stagflation.
Yeah.
Now the new term is reinflation. Are we going to create such a frenzy by dropping interest rates and everything that people start spending too much and go nuts again, and affect the economy that way and heat it up?
If the cost of borrowing gets less, people are going to borrow. And
right.
What do you do with borrowed money, Ross?
Spend it.
Spend it.
Mm-hmm. Well, that kind of goes along to the question that I had too. What about our national debt and compared to that Fed rate? How much does that affect whether or not the Fed wants to drop? Because obviously the higher the interest rate, the quicker our debt accumulates.
Absolutely, Jimothy. I totally agree with that, because I read a wonky article 6 months ago talking about that the Fed might drop the rate, not because they're worried about inflation or the job market. They might do it just to reduce the national government's monthly debt, to pay that. Right. What is it, $32 trillion that we owe, or whatever?
35 now.
Yeah, or something
goes up like
that.
$1 trillion every 4 months
crazy.
Or something.
It's crazy.
It's insane.
So there is a theory that they might do it for that reason, which isn't a healthy reason to do it. It's just like the political reason of dropping the interest rates to get elected. If you're dropping the Fed rate just because the Fed we can't afford to pay our monthly debt service, that's a big problem, right? That would be a big problem.
So the federal government is on adjustable rate borrowing.
Oh,
right?
In essence, yeah.
Big adjustable rate mortgages, right?
Actually, it kind of is adjustable rate, right? Yeah. It is kind of. So that could be a factor later on.
We should think about getting them into a fixed rate.
Yeah.
Yeah. Oh, Mike.
Yeah. Is it time, Jimothy?
Yeah.
2 minutes.
I didn't even really. Oh, my thing is a little different on mine. I don't know why.
Oh, so, you haven't adjusted for East Coast.
Yeah, I haven't adjusted. We've had another day, another great day here at Florida Talk Real Estate. I hope everybody enjoyed what we talked about. Please don't forget to subscribe to our YouTube page and subscribe and like it. And if you can comment it and even share it to let other people know about what we're about. We give some really valuable information about Florida real estate market. So if you have a interest in that, we're the people to go to. Ross from Brightway Insurance, thank you so much today for being here.
You're welcome. Hope everybody has a great weekend.
I'm so glad that you're feeling better. You sound so much stronger than last week where you're hacking up along.
It was a rough 3 weeks. But
yeah, it was.
Back.
And Mike, thanks for coming on the show again this week, like all the time. And I hope you have a great weekend.
Yeah, you too. Thank you.
Yep. And Jimothy, I hope you have an awesome weekend. Are you doing anything special this weekend?
You as well. No, nothing big. Just, keep it on the honeydew list and, of course, football.
Yep.
And some really good Major League Baseball going on right now. Especially if you're a New York baseball fan at all.
Yeah, it's so true.
They walloped the Dodgers. The Mets walloped the Dodgers last night, and didn't see that coming. Just the way it's been such an up and down series.
The Mets. And then let me ask you: Are you doing any events for Dolphins this weekend?
Yeah, I'll be up at Big Shots in Vero Beach for a Miller Lite watch party from 12:30 to 2:30 tomorrow.
Supposedly one of the best places to retire, one of the best family-oriented cities. We talked about that 2 weeks ago, Vero Beach.
That's a fun place to go to. It's a great place to watch some football and hit some golf balls too if you're into it.
Oh, it's a golf. It's like a Top Golf or something like that.
Type of